Brad Williams, Frugal Finance, Investing. What is an ADR? American Depositary Receipts. An ADR is a security that represents shares of non-U.S. companies that are held by a U.S. depository bank outside the United States. What is an ADR? ADR allows U.S. investors to invest in non-U.S. companies and give non-U.S. companies easier access to the U.S. capital markets. Many non-U.S. issuers use ADRs as a means of raising capital or establishing a trading presence in the United States. The non-U.S. company may sometimes be referred to as a foreign private issuer. The first ADR was created in 1927 by a U.S. bank to allow U.S. investors to invest in shares of British department store. Today, there are more than 2,000 ADRs available, representing shares of companies located in more than 70 countries. An ADR is a negotiable certificate that evidences an ownership interest in American depository shares, which in turn represent an interest in the shares of non-U.S. companies that have been deposited with a U.S. bank. It is similar to a stock certificate representing shares of stock. The terms ADR and ADS are often used interchangeably by market participants. ADRs trade in U.S. dollars and clear through U.S. settlement systems, allowing ADR holders to avoid having to transact in a foreign currency. An ADR may represent the underlying shares on a one-for-one basis or may represent a fraction of a share or multiple shares. For example, for one company, an ADR may represent several shares of the underlying security, while for another company, an ADR may represent a fraction of the underlying security. The use of a ratio allows ADRs to be priced at an amount, or typically of U.S. market share prices. ADRs are created by a depository bank when the non-U.S. company or investor who already holds the underlying non-U.S. security delivers them to the bank or its custodian in the non-U.S. company's home country. The bank will issue ADRs to the investor in the U.S., and the investor will be able to resell the ADRs on a U.S. exchange or the over-the-counter market. ADR holders may also surrender ADRs in exchange for receiving the shares of the non-U.S. company. These transactions are generally performed by brokers and other types of investors who are active in foreign security markets. ADRs may be sponsored or unsponsored. Sponsored ADRs are those in which the non-U.S. company enters into an agreement directly with the U.S. depository bank to arrange for record keeping, forwarding of shareholder communications, payment of dividends, and other services. An unsponsored ADR is set up without the cooperation of the non-U.S. company and may be initiated by a broker-dealer wishing to establish a U.S. trading market. An ADR, however, may not be established unless the non-U.S. company is either subject to the reporting requirements under the Securities or Exchange Commission Act of 1934 or is exempt under the Act. ADRs are always registered with the SEC on a Form F6 registration statement. Disclosure under Form F6 relates only to the contractual terms of deposit under the deposit agreement and includes copies of the agreement, a form of ADR certificate, and legal opinions. A Form F6 contains no information about the non-U.S. company. If a foreign company with ADRs wishes to raise capital in the United States, it would separately file a registration statement on Form F1, F3, or F4. If a foreign private issuer seeks to list ADRs on the U.S. stock exchange, it would separately file with the SEC a registration on Form WF. Registration statements used to raise capital or list ADRs on an exchange are required to contain extensive financial and non-financial information about the issuer. Market participants have generally categorized ADRs into three levels depending on the extent to which the foreign company has access to the U.S. markets. Level 1 ADR programs establish a trading presence but may not be used to raise capital. It is the only type of facility that may be unsponsored and, as a result, may be traded only on the over-the-counter market. Form F6 would be the only form required to be filed. No information about the issuer would be available on the SEC's EDGAR system. Information should be available on the issuer's website. Level 2 ADR programs establish a trading presence on a national securities exchange but may not be used to raise capital. Again, Form F6 would be used to register the ADRs. The non-U.S. company is required to register and file annual reports on Form 20F with the SEC. Level 3 ADR programs may be used only to establish a trading presence, but also to raise capital for the foreign issuer. A registration statement on Form F1, Form F3, or Form F4 would be filed in order to offer the ADRs. The non-U.S. company would be required to also file annual reports on Form 20F. What fees are charged to ADR investors? As a matter of course, an ADR depository bank may be authorized under the deposit agreement relating to the ADRs to charge a fee called a custody fee for the work it performs on the ADR. An ADR depository bank charges holders of ADR custody fees, sometimes referred to as depository service fees, to compensate the depository bank for inventorying the non-U.S. shares, performing registration, compliance, dividend payment, communication, and record-keeping services. A common practice for collection of the custody fee is the ADR depository bank to subtract the amount of the fee from the gross dividends paid by the bank to the ADR holders. Typically, the depository trust company, which announces both the gross dividend rate and the net dividend rate after the deduction of the ADR custody fee. The ADR depository bank pays DTC the net dividend, and DTC allocates the net dividend to its users. However, a number of ADR issuers do not pay periodic dividends, which prevents the fees from being collected through the above described mechanism. In this case, DTC charges the fee to its users and passes them on to their customers. Depository banks may charge other fees, such as relating to the distribution of dividends, foreign currency exchange, voting of shares, and other matters. What should investors do before investing in ADRs? Like any other investment, you should learn as much as you can about a company before you invest. Research the political, economic, and social conditions in the company's home country so you'll understand the factors that affect the company's financial results and stock price. Understand that non-U.S. companies are subject to financial and other disclosure requirements that differ from those required of U.S. public companies. Except for the annual report on Form 20F, non-U.S. companies are generally only required to disclose what is required in their home country. Any disclosures may also not be as extensive or comparable to that of U.S. public companies. Prior to investing in an ADR, investors should ask their broker-dealer what fees are charged to them as an ADR investor. Typically, fees are accessed per ADR. For example, 1,000 ADRs could be assessed a fee ranging from $20 to $50. Investors should review the fee reported in the Form F6 registration statement under the Securities Act of 1933, available through the SEC's website at this particular link. Fees can be viewed in the sections of the registration statement typically titled Description of American Depository Shares or Description of American Depository Receipts. The websites of depository banks that are active in the U.S. market also contain information about investing in ADRs and serve as a source of information for investors. Related information: for more information on ADRs and international investing, check out the ADR Fast Answers and read other publications. There's a lot of information here related to ADRs, specifically the fees. Be cautious because in a lot of these ADRs, they're subsidiaries of the parent company. Now, we had issues in the past regarding the Chinese, I think it was Alibaba or Baidu. There was conflict there, and American investors who bought Baidu found that they had absolutely no rights if Baidu backed out of the country. In other words, just stopped doing business in the U.S. because of China restrictions. But keep in mind that ADRs, there's a lot of nuances related with ADRs. On the other hand, there's some rather boring aspects of ADRs. For example, British Petroleum is an ADR, and it's probably the fourth largest oil company in the world. It's boring. It generates its dividend, and subsequently, you're just subject to the nuances of the oil industry, as opposed to, as I said, there's over 2,000 ADRs. My recommendation: due diligence. There's enough information available to you as an investor to identify whether it makes sense to participate in ADRs. Brad Williams, Frugal Finance. Hope that helped. Thanks for watching. See you soon.